Okay, welcome back to the channel everyone. This video is going to be on the ICT daily bias, just using one time frame for daily bias, one time frame for entry to give you a profitable strategy that you can use, repeat it over time and be profitable if you stick with it, learn it and implement all your other knowledge and stuff that I've taught, stuff that you've learned from other people. You'll be profitable in no time. Just give it your all and dedicate time to learn it and practice it and you'll be fine. So I'm going to start here on EURUSD on the daily time frame, and effectively what the strategy is, or the ICT daily bias. You're just looking at what the previous day, what happened in the previous day. So if we go back to this day, I could start anywhere. I just picked some good examples that are clear. So to get your daily bias for the next day, you're going to look at the current day's price action once the day is closed. And to do this, you're going to look at the previous day's highs and lows. So you can mark them up like this, and you're just going to see what happens. So here, what you can see happened is price opened, took out liquidity, pushed down and pulled back. This is ICT's open, high, low, close. So you got your open, high, low, and then close. If I just draw it out in arrow form, you got your open. So for this candle, you got your open here. Then you got your high. Then you got your low down there. And then you got your close. And this is what on the lower time frame the price action is going to look like. And as you go to lower time frame, it's going to be even more jagged. Basically, price takes out liquidity, pushes up, traps traders to go long, then goes short, and then consolidates during the end of the day to possibly trap traders again that were short, and then it's going to push up. And this gives us our bias for the next day. So because price closed outside the low of the previous day, the bias is going to be bearish. So there's going to be an expectation the price pushes up, goes down, and then closes. So closes bearish basically, and you're looking for the previous day lows to get swept. That is another key thing. So you're going to be looking for sells above the open to target the previous day low here in this case. And then what happened, if we just go one candle, you can see that did happen. Price went up and then took out the previous day low. And as it happened again, price closed below the low. The expectation again is that price would do the same thing. We'd be able to get an entry above the open and then target these lows. So if I just go down to the 3 minute, which is the time frame I like to use for entries for this strategy, you can use anything between the 1 minute and the 5 minute. The 1 minute's going to have a lot of noise and you're going to get stopped out and it's going to be harder to find entries. The 5 minute's going to have a higher win rate but less trades, and so you might miss out on profit there. But here, ideally you're looking for a high of the day in London session because that happens the majority of the time. So you'd be looking for Asian high highs to be swept or whatever, get a change of character in London. This is the London kill zone I've marked up from 2 AM to 5 AM New York time EST, so UTC -4. Look for your setup in this kill zone and then take price short. But that didn't happen in this case. What did happen instead is we got that set up in New York. So we had a sweep of this liquidity over here. And we got a clear change of character over here with some imbalance. You didn't really get anything else other than here outside of the kill zones. Try and trade during the kill zones, pick one, or pick London and New York if you want. But what we did get is this very nice textbook setup of a change of character with imbalance with a nice supply zone. And if you were taking your entry there, stop loss above the supply zone, entry just at the start. You can just target this liquidity for a quick scalp. You can target this low for 1 to 11. And if you were going for previous day's lows, they'd already been taken, but you could target them, or you could target wherever you want. That's the 1 to 20. That's pretty unreasonable. You're not going to be getting that very often. You can just catch a quick scalp or quick liquidity sweep of the New York kill zone lows. But that's just one example of how you could use it. If we go back to the daily, I'll go through some more examples and see how it works. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on funded accounts with proven results. And it also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options. And let's get back to the video, because obviously it's not going to work every time. You can see here, it did actually work, but you're unlikely to get a nice trade within that small wick. And again, price closed below this low. So you're expecting it again, but it didn't happen here. You know, you were expecting a price push up and then go down, but that didn't happen. So now what's happened here? Price has taken out previous day's highs. If we delete all of this stuff and look for our buys for the next day, price has taken out previous day's highs and closed back within it. So the bias would still be bearish. You're going to look for open, high, low, close. You're going to look for sells above the open, and that didn't happen here again. But what did happen? Similar thing. We had the highs swept and price closed back within the range. So again, our bias for the next day is going to be bearish because we've had the buy side liquidity swept, and our price is likely going to turn bearish. And in this case, we did get it. We got open, high, low, close, liquidity swept. Could have got an entry in here before price pushed down. So if I go back to the 3 minute, look for possible entries in the kill zones. In this case, there wasn't one. There was one on the 1 minute that I found, which I will show you shortly. There's a little bit of imbalance here actually that you could have traded from. But when I can't even pull it across, you know it's a tiny imbalance. But there was technically a shift in market structure here. You got high, low, and then price push down, break below it, and then price pull back, fills the imbalance, doesn't take out this liquidity or this high, and then it continues down to the previous day low. I should mark up as a target. So we were just targeting down here, and a second target, you know, when you become more advanced, could be down there because that's some sell-side liquidity. But going down to the 1 minute to show you some lower time frame entries if you're confident in using the 1 minute. There was this nice supply zone, you know, bullish candle, sweeping liquidity, and then price returned to it and went down. So this is all just for education. This is not something that you would probably take because it's a very high risk trade, but 1 to 8, if you're willing to do those, then it can be definitely doable. And this is where it becomes a bit unreasonable, but a 1 to 28, obviously you're not going to hold that long, and obviously you're not going to get a target that, because trying to use the 1 minute time frame to get entries and then use the daily as liquidity targets, it's doable, but it will take a lot of effort and a lot of psychological attention, because it's going to be hard to not only hold the trades this long, but you're going to be having like 20 losses in a row before you get something like this. So it's going to be hard, and also spreads are going to make up a lot of your trading costs when trading the lower time frame, especially the 1 minute. You know, this 1 to 27, 1 to 28 trade, when you include spreads on EURUSD is not going to be much, but on some other pairs, you know, it could be something like this, and you suddenly down to a 1 to 21. But that's just something to consider. And I'll go through some more examples now. We can just see what happens. So again, we're expecting price to be bearish because we closed below the previous day's low, and we're expecting price to take out the low of this day, which does happen. Maybe there was an entry. We can have a quick check. Maybe there wasn't if price was just a bit messy, and actually there was a very nice entry here. So again, entry from that supply zone is outside the kill zone, so that's up to you if you want to have that as a rule. But I keep forgetting to mark up the previous day low that we were targeting. And it was just there, so we already swept it. So when this happens, you can just target it as a rule, or you can just target the London session kill zones or just the previous low so far in this trading day. That's also going to be some liquidity resting below there, so that's a nice target point. 1 to 6.8. They're not always going to win. I'm showing a lot of winners here, so hopefully I'll be able to find a loser, but they're not all going to win. More will lose than will win. Your win rate could be around 30%, could be 40%, depending on your risk reward, what time frame you use, and how strict you are at maybe even implementing a higher time frame bias, looking at the weekly or whatever. But again, our bias is bearish, and this is probably where your losses will be. And then if you're looking for an entry here, trying to target this low because your bias is bearish, you might be able to get a trading entry. It's hard to say in hindsight, but maybe you take an entry from this supply zone here. This could be a clear loss. It's not the best entry. There's not much imbalance, and price doesn't give a clear change of character, but it could have been an entry nonetheless. And nice risk reward again, but you lost. And that's going to happen more often than not, probably, unless you become really skilled at this. But if you practice it, then the wins will make up for the losses and give you some extra profit. But now, what happened? We closed above the previous day's high, so now our bias for the next day is bullish, sorry. and we're looking for price to open, low, high, close. So again, try and get an entry in this area here, probably unlikely because the wick is so small. Price probably just pushed up. Actually, it looks alright. So you could have got an entry from maybe some imbalance here. Entry there, stop loss below there, and target up. Again, that would be a loss. But you could also just target, if this is your demand zone, you could just target the high before the pullback. You wouldn't have the best risk reward, but this is where you're going to get the higher win rate. You can go entry there, stop loss below the imbalance candle, and then target here 1 to 1.3, sorry. Or target this buy side liquidity, or target up here. That would have lost as well. Target the Asian highs, whatever you want to target. But your bias for the day is still bullish, and if you're confident in that, one losing trade won't put you off. Because when liquidity gets swept here, you can look for another entry. Possibly looking for this imbalance now. Either getting just an entry from there, stop loss below the imbalance candle. So the candle before the imbalance is what I mean by that. And then target, therefore 1 to 2. Or target the previous day's high, which might have already been hit. Yeah, probably already hit. That's one way you can use it. And I can just go through, not going to go through more examples. So again here, bias was bullish. And we got, there was probably an entry in this wick. I won't go through all of them. I don't want to waste too much time. But if you want more examples of this, then yeah, feel free to just reach out to me, join a mentorship, and I'll teach you more. We have weekly educational videos so on all these topics and everything you want. So you can request what you want if that's what you want to, if you're interested in. But yeah, you're looking for, your bias is bullish, looking for a entry to go long. And again, this candle is very, very bullish. Follows the rule. We got a close above the previous day high and a sweep of the previous day low. So this is an extra high probability trade for the next day, that the next day will be bullish, whether or not it wasn't. But maybe you could still get an entry down here to go long. It's all just about having a bias and having rules to stay consistent. One thing to note actually, when you are in a trading range like this, you don't take out the previous day high or low, then there's two things you can do. You can keep your bias as bullish and think that this high is still going to get swept, or you can just not trade for the next day and just have a day off. I don't know, do some back testing or just have an actual day off. But you can see, if we play it, that did happen. The previous bias did play out, and this high was swept. Could have got an entry in this wick, and then took price up. So it's a very simple strategy, and it does work, and it's got a reason to why it works. That's the main thing about a strategy. If you want to build your own, if you want to build your own with me, again, you can join the course team where we do some edge development or one-to-one mentorship. But if not, and you want to do it on your own, the main thing you're going to want to do is actually have a reason for the strategy, not just buy at 6 a.m. every Wednesday if it's the 17th of the month, because that doesn't really make sense. But if you've got a strategy like this where the rules actually make sense and it's about market structure, price action, and the algorithm like dynamics, kind of just rambling words there, but hopefully it makes sense. There's actually a reason behind this strategy and reason for why it should work. So that's always an important part of building your own strategy. So just to kind of summarize the rules, you're looking at the previous day compared to the current day to predict the next day. And if price closes above the previous day high, your bias is bullish. If it wicks above the previous day high and closes within, then your bias is bearish. If it closes below the previous day low, then your bias is bearish. And if it wicks below the previous day low and closes back within the range, then your bias is bullish. And when your bias is bullish, you're looking for the current day high to be swept in the next day. And when your bias is bearish, you're looking for the current day low to be swept in the next day. So hopefully that makes sense. If not, yeah, just leave a comment or reach out to me on Discord and I'll try and explain it better. But hopefully that makes sense. Definitely test it for yourself on Euro USD and other pairs if you want to trade something else. But definitely check it out. It's very powerful. So hopefully this has been useful. And if it has, please do leave a like, subscribe to the channel and join the free Discord or consider joining the mentorship. Yeah, thanks for watching and I'll see you in the next one.